All right, people, I'm making a video pretty late. Time is pretty. I think it's about 9 p.m. now, or past 9 or so. But I'm out again doing my delivery. I did my third degree black belt grading, like I said, on Sunday, and I got promoted. So right now I'm a third degree black belt in Taekwondo. Congratulations to me. We're having our last class with the kids on Saturday. Today is Thursday, so on Saturday we're having our last class before we close down for the summer, and we'll be back in September. And in the meantime, I just came to update you that that's the latest news. Finished work today, 5:30, and then yes, I did my first consultation today with a friend that I met at a work party a few weeks ago. He's interested in stocks, and we exchanged numbers and stuff, and then today I had my first consultation, was for 2 hours. So I got to time myself, see my presentation skills and things. So I used him as, how do I put that now? As my lab rat, so to speak, just to experiment, because I'm actually thinking of going into consultation as far as stock investing and option selling is concerned. Because obviously delivery is not a long-term thing. I only intended to do it for a period of time. But what's happening is there are lots of drivers coming. They kind of changed the way the whole system is working. So we have multiple drivers now. So we're not making as much as we used to, despite the fact that I'm working for 3 of them, with 3 main ones. But still, you know, and then the price of fuel gone through the roof. You put everything together, and it's not as profitable as it used to be. Still better than nothing, but it's not as profitable as it used to be. And I'm beginning to think maybe there are other things I could do with my skill set that I could leverage and spend more time on. Maybe developing a package for a beginner course into stocks and options trade, stock investing and options trading. I don't like to say stock trading because I don't like trading stocks, so to speak. I'm a buy and hold type of person, and then I trade options on top of the stocks that I own. Again, I'm still waiting. I've clocked 15,800 on in my portfolio, and I'm selling puts on the Russell. Still waiting for it to come down. It's still oscillating between. Did I say oscillating? That's a physics term I did in secondary school. Oscillation, simple harmonic motion, amplitude and wavelength. Jeez, let's forget all that. That was some 1999 to 2001, and we're in 2022, and I still remember that. Genius. I don't think so, but hey, so what I'm saying there is, so it's kind of oscillating between 170 or 175, I think, and 166. There, it's going up and down in that field. But I am 15,008, which is 158. So I'm still selling puts. And what I intend to do is, if it does come down to that, while I'm waiting for it to come down, I am selling puts. So I'm still making a little percentage every week on the cash that I have, because I'm trying to buy the Russell with that. And I know the market is definitely going to come down. Everybody knows that we're going into a recession. Everybody knows that this is going to happen. It's just a matter of time. And that's what I'm waiting for. But instead of just waiting in cash and the money sitting there with inflation and everything, I'm making about a little percentage a week on that. Let's see. The last time I saw it was for $23. And next week, most likely, will be another $25. So 25. So that's about $100 a month on 15,800. You do the maths, okay? You do the maths. That's the percentage. That's what I'm making right now. Waiting for the price of the Russell to come down. And my colleague or friend that I did the consultation with today, he was really impressed and really happy. I started with what's a covered call. I started with what are options, and we went into covered calls and went into the terminologies, the common terminologies like strike price, expiration date, Greeks. I touched on Greeks as well, because when he said when he first started, he started buying options and he quickly realized he lost a lot of money, and that put him off. That was late last year, and that put him off. And he said, okay, at some point he's gonna have to settle down to really learn about options. And I told him, I say, unless you're a genius or unless you're really good at, reading the charts and basically you're trading proper, and I don't trade proper because I just don't. It's not something I would like to do. Buy and sell is not something I'm the type of investor that if I have a property, I prefer to buy a property and rent it out and get monthly cash flow or monthly rent rather than buy it, fix it up, or force appreciation and then sell it for huge capital gain. I'm the slow and steady type of person because I hate risk. I hate risks or risk, so to speak. So I try to hedge it as much as possible. So he was impressed, and I asked him, I said, can I start a consultation? Do you think based on the content that I gave you tonight, and I gave him a good grilling as far as the content is concerned. I also touched on selling puts, and he was really impressed. So he got a clear picture of how to use options now and how to make money on options, which is selling rather than buying. Now, you could make money buying, but if you don't know, let me tell you now, if you buy in options, you have a few things that you have to, that's working against you, and that's why I say you have to be really good. Time is working against you, that time decay, theta, and you also have the direction of the markets, that it has to move in the direction of the market, that it has to move in the direction that you are betting on. So if you're betting that it's going to go down, it has to go down, and not just a little bit, proper. The going down can, the amount you lose in time decay, theta, might be, if it's going against you, you're going to lose twice. So you lose in the direction because the direction is going against your bet, and then you lose in time decay as well. But if it's going, even if it's going in the direction that you want, it has to move fast because you're losing money on time decay. And if it's not going fast enough, the money you're supposed to make when it's going in the direction that you want, it will not be enough to offset the loss in the time decay. So it's a bit complicated when you're buying, okay? It's a bit complicated. But when you're selling, it's pretty easy. We don't have to be geniuses at the Greeks. We don't, you just have to be basic understanding of the charts and how to read the charts. And basically, I just use trend lines, support and resistance, and I check the channel, and pretty simple elementary stuff, and that's what I use. And I don't do fundamental analysis that much because I've moved away from individual stocks now. I'm more into ETFs, and when you're talking about ETFs, there's not too much you can do on fundamentals. Think of it as almost like a mutual fund, like a managed portfolio. So a portfolio that's managed by someone or by an ETF manager, exchange traded fund. So it's a collection of stocks from different companies to make that one, and the percentages of the holdings of each of those stocks differ depending on their performance, and they swap and move them around. So, and they're not as volatile as normal stocks, but given the premiums on them are not as high as normal stocks. But like I said, I'm a boring type of person, and I'm okay with that as long as I don't lose I don't lose money. It's on 8-minute mark. So before I go, I'm just gonna put a picture now, and you will see it. This is where I what I've been doing my portfolio since last year. So later, if you've been following me, you know that at the end of last year, I put some amount. Deposited some amount of money into my portfolio to buy the TAN ETF, and that was doing well. And in January, and at the end of January, I put some money in to buy Tilray as well. And then I think in April or so, I put some money in as well to buy, it wasn't Beetle, it was Pinterest. But ever since the market started misbehaving, I've liquidated everything. And you're going to see in the picture there, you see at the bottom where I have at December, where I put about 4,000 something. That's why it moved up that much. And then the other two little deposits that I have there. And this is that's the current position of my portfolio right now. And I'm waiting for the market to drop so I can pounce on these stocks that are going for sale. Now, whether I catch it at the bottom or not, it's hard to tell. So what I'm thinking of doing is, when it comes down to the point where I have enough money to buy it, I'm thinking I'll just buy the call at that stage for a fraction of the price. Yeah, it is volatile, and then I'll be selling covered calls on the calls as opposed to buying. So I'm risking a fraction of the money. Worst case scenario. I don't even know why I want to do that. It's an ETF anyway, and it's not going to go down to zero. So I'm still trying to decide whether I buy the ETF itself when it comes down to striking range, or buy the call for the ETF, and whichever the case is, start trading covered calls on that. I'll leave you on that for now, and I'm thinking of starting the consultation. He said it was well worth it, the content that I delivered. I said if I was to be charging 200 euros for 3 hours, was it worth it? He said it was worth it, because I started from the top, got him through the psychology and explained the terminologies, and then we started from the very beginning. What is a covered call? And we explained up to what is a cash secured put, and that was where we stopped for now. I didn't want to blow his head off with lips and spreads and you know, all that. So guys, I'm gonna leave it here for now, and I'll see you in my next video. Thanks a bunch.